going to show you guys today some of the things that can go wrong, some of the things that can go right, but basically it's going to encapsulate some of the things we've been talking about on this week's Emily Now episode. And this is for a commission salesperson who purchased a downtown condo in the early 2000s, and life was pretty good right up and until kind of 2006, 2007, the peak of the market, and earned some great commission income and took it, and he bought a cabin on the lake. And recently came through emilynow.ca because he needed to pay out some financing on the cabin that he had bought. And you would say, well, why did he need to pay out that financing? Well, it turns out when he bought the cabin, he ended up getting a first mortgage and a second mortgage because his credit wasn't quite where he needed it to be. He had some credit problems in his past that, when he went to the bank and said, look, I want to buy a second property, the bank says, well, your credit kind of doesn't fit the bar. So instead of giving you all the money that you're asking for, we're only going to give you some of it. And then he went and got a second mortgage at higher interest rates. Now, he ended up coming through emilynow.ca because he thought, well, maybe I can refinance my condo in downtown, my downtown condo, and take out some of that money and pay off the second mortgage. So we were able to do that for him. But a couple of things that come out in this is, first of all, if you are going to buy a second property, a cabin on the lake or a vacation property of some sort, you've got to make sure that you have a plan. And in this particular case, during the best earning years that this particular individual had, he didn't bother paying off his mortgage outside of the normal payment. So just as a refresher, most times when you make a mortgage payment, a little bit goes to principal, a little tiny bit, and a lot goes to interest. And so even if you have a mortgage for 5 years, you'll find that the principal amount that you end up paying off isn't as much as it could be. So in this case, instead of using his really good earning years to pay off the mortgage, he ended up spending the money on other things. And so when his earnings slowed down a little bit and the economy changed, he was really finding it tough to go to the bank now and try to renew his mortgage when the mortgage term came up. So if you're going to have a second property, and if you expect that things in the economy might change your earning potential, you're going to want to pay off your mortgage. In this case, the reason this particular individual was able to pull off what he was talking about was because he was really, really fortunate. The downtown condo, the property value had actually risen. So when we went to go and do the refinance for him, he was able to take out some equity that he had built up because of the market value increasing, and was able to take that equity and then use it to pay off the second mortgage on the cabin. Now some people would say, well, that sounds like a pretty smart guy. Yeah, maybe, but what if the market value of the condo didn't go up? And not only what if it didn't go up, what if it just stayed sort of flat? Then that means the second mortgage, the term had come due, and he may have been facing foreclosure. Even though the second mortgage was up to date, that particular lender who was doing second mortgages said, look, we're not in the business of doing these types of properties anymore. We don't want to do cabins and vacation properties, so we'd like our money back. So he was in a position where he had to figure out how he was going to take care of this. And for you, if you're looking at buying a cabin or a vacation property, make sure you have a plan. Make sure that you know you can make the payments, have a backup plan if you can't, but more importantly, make sure you're paying down your mortgage over the term. And again, if you're looking at getting a cabin on the lake or a cabin in the woods or a cabin on the beach, you can visit emilynow.ca and get started on putting your information together and figuring out how you can get approved. It'll take you less than 5 minutes. You can get an Emily score out of 10, which you can then use to see what the interest rates are going to be, what the banks, who the banks are that would actually approve your request, and then you can have us get you approved, or you can approve yourself by sending your information directly to the bank. So we, of course, would encourage you to do that.